Thank you for purchasing this course. Welcome to Artist Digital Trading Tips. In this course, you will learn the reversal candle strategy. It is a kind of strategy that I use in my trading and it works very well. However, please note when you are applying this strategy, there are a number of things you need to consider. One is the perfect market for trading. You need to trade on the perfect market for trading. If you trade on a wrong market, you might not achieve the desired results. You also need to be very disciplined when applying this strategy, otherwise you might lose your money. You need to master it on trial account, then apply it on your real account trading. So let's in this course we will cover the basic principles for online trading, where this strategy will work. We will also cover the basic currency pairs in online trading, and the most important of all, we will also cover how to know whether the market is good for trade or not, because this is one of the main reasons why many traders lose their trades. We will also have examples of a good market for trade and an example of a bad market where you should close and wait for a few hours to trade again instead of continuing. We also have the main part of the course, where it is the main part of the course, the strategy itself, and the how to make your trades, put or call trades, and how to use martingale recovery in case you lose a trade. So without wasting time, let's go into the course. The basic principles of online trading. Trade when there is no trend. If the market doesn't show the direction it is going, whether up or down or sideways, this market is not good for trade. If the market is moving to a direction, it will form continuous green candles or continuous red candles, or green candles then a red candle then continuous green candles. It won't form one green candle, one red candle, one green candle, two green candles, one red candle. It will show direction. I know you understand. It will show direction, whether upward movement, downward movement, or sideways movement. If the market shows a trend and a direction, that market is good for trade. If it does not, that market is not good for trade. So whether market is good or bad, it means that the market is moving in a direction smoothly. There are normal candles. In that you can consider whether market is good. If market is not moving to a direction like this USD CHF and then ZUSD, there's no trend. There's one red candle, then green, then red, then green candle. There is no trend here, so in this market it's not good for trade. No need to trade on this market. Make sure you have market support. No strategy can work without market support. This is whereby you should go and look for our signals, our trading candle signals that you will learn along this course, and check whether they have been working before, like a few minutes from before you started trading. If they have been working, market is good for trade. Make sure you do not lose your entire balance. Yeah, this is where most people fail in online trading, whereby when you lose, you try to recover the balance you lost, and most of the time you end up losing all your balance. If the market is heavily against you, you need to stop trading and save your balance to trade the next day. Basically, the main principle I use is to stop trading when I lose 3 continuous trades. If you need to trade the same day, just stop trading for maybe an hour and come back and check whether the market is good for trade. Never trade without checking whether the market is good for trade. We will learn how to check whether the market is good for trade. Then only trade when perfect signals form. In this course, you'll learn the perfect signals to use for this strategy. The biggest challenge you'll have is being tempted to trade when the signal has not completely formed. If you want to win 100% of your trades, make sure you trade when the signals have perfectly formed. Otherwise, sometimes you will think a signal has formed, yet it has not formed perfectly. Only trade on perfect signals to avoid losing your trades. Another point, set a target and stop trading once you reach your target. This is a control measure for overtrading. If you don't have a target, you'll overtrade and the market will change. Even if you're winning, the market will change and you'll start losing and you won't realize it up to when you're back to zero. Basically, the main point here is you never overtrade. Set a target for what you want to reach, and also a new strategy that I'm using, set a target for the lower side. If you have maybe $10, set a target to maybe reach $20, and that's when you stop trading. Or backwards, set a target of when you lose up to $5, you stop trading and leave the balance for tomorrow trading. Another point, trade with only 10% of your balance. That is, if you have $10, your trade should be $1. Otherwise, you might put $5 and that's you'll only make 2 trades if you lose. The temptation is to put higher risks, higher returns, but the best strategy is to grow your account slowly. So I'll run through the principles again. 1, do not trade when there is no trend. 2, make sure market has direction when trading. Make sure you have 3, make sure you have market support. No strategy can work without market support. Make sure you do not, number 4, make sure you do not lose your entire balance. Stop trading when you lose 3 continuous trades. 5, only trade when perfect signals form. Of course, those are the signals that you'll learn. 6, set a target and stop trading once you reach your target. Never ever overtrade. Never sit on your computer for hours. So now we are done with the basic principles for online trading. So we move to the basic currencies, the basic currency pairs that I normally trade with. This is Euro USD, GBP USD, AUD USD, USD CAD, USD CHF, USD JYP. However, I normally trade with 4 sets. Maybe I can do Euro USD, GBP USD, AUD USD, and USD CAD. Just four at a time. Good. Now we move to the most important part of this course, how to know whether the market is good for trade. If you don't know whether the market is good for trade, you will win some trades, but it will be out of luck. You'll just be lucky, because you need to always check the market, whether the market is good for trade or not. If the market is not good for trade, you will win some trades, but in the long run, you will lose your balance. So this is how to know whether the market is good for trade. Open 4 charts, like Euro USD, USD GBP, USD, like four charts, USD. Yeah. Now, after you open these 4 charts, check whether the market is slow. Do not trade when candles are forming slowly. The strategy will not work in a slow market. This is where the candles are forming slowly, or some candles don't form perfectly. The candles are moving slowly. This market is not good for trade. Make sure candles are moving smoothly and forming good candles. 2, make sure to check whether the market is moving in a direction. Make sure the market is forming trends upward or downward. Make sure the upward or downwards. Make sure that the market forms more than 2 or 3 consecutive red or green candles, not mixed red and green candles. That's what we mentioned in the principles earlier, that you should make sure that the market forms directional candles, like 3 green candles, then a red candle, not 1 green candle, red candle, red green candle, red candle. That is not a good market for trade. Also check whether signal candles are forming. When you learn the candles that you will use to be trading on, you'll have to when you are checking whether the market is good for trade, you'll have to go back to a history like 5-10 minutes and check whether the required candles for trade have been forming and whether they worked. I'll show you how to do that. So we will set charts and indicators. From chart type, you click on candles. So you set candle time period to 1 minute. You go to indicators, popular, select Bollinger Bands. From setup and apply, change the period to 10 and deviation of 2. The other settings will be the same. Next we will go to popular again. We will go to RSI indicator, relative strength index. So we will set 14 period, overbought, and we will set to 80. This is oversold, we will set to 20. This is when we will have one RSI line. So we now have an RSI line at the bottom, and you have the Bollinger Bands at the top. This is one chart, Euro USD. You can set time to, because candle time is 1 minute, you set time interval to 1 minute. You can set 5 minutes if you want, but if you select 5 minutes, make sure you have 5-minute candlestick. Here you have per trade amount. It should be, as per our principles, it should be 10% of your balance. How to know whether this chart is suitable or not? We are using reversal candle strategy, so we have to choose the charts according to our strategy. Our strategy works according to overbought and oversold line. We need a straight moving chart like this. This time Euro USD is moving straight. You can see all 3 bands are moving forward. Now this green candle is at the overbought line. You can see this RSI is touching, not touched the overbought, but almost touching the overbought line. And there is one green candle, and that green candle is extra large, and it closes above the upper band of the Bollinger Band. So at that point we set our trade to lower, and the next candle goes down and it reverses. That's why it's called the reverse candle strategy. So when you see an extra large candle that crosses the upper band of the Bollinger Band, and at the RSI it touches the overbought line, or it's mostly almost close, but make sure it is an extra large candle, and so most of the time it has no tail. At that moment the next candle will reverse downwards, and you put your trade to put. If it forms at oversold, you do the reverse, you call. We need to use this type of chart for our reversal candle strategy. So in this point I have 3 RSI lines. This RSI is 7, RSI is 14, RSI is 21. You can change it as you set indicators. You put 3 RSI. I'll show you how to do it. This is called the triple RSI strategy. If all 3 RSI touch at the same time to overbought or oversold, then there will be a perfect signal. So this RSI 7 is touching here, RSI 14 is also touching here at the same time, RSI 21 is also touching the oversold. All 3 are touching the oversold line at the same time, and this market is moving to straight direction, and Bollinger Band, all 3 bands are moving to straight. And here you can see a red candle without tail and without head. Sometimes it forms with a small tail. Closed below this red candle, closed below this band. This red candle is extra large compared to the other candles, than the candles before, than the 3 or 4 candles before. Here there's signal for reversal. You call, and market change to move upwards. I hope you understand. So some things you're checking whether the RSI, the 3 RSI touch the lower band of the Bollinger Band at the same time, or around the same time. Make sure in your history the bands stay within the oversold or overbought line, it doesn't cross above and or below. When the 3 RSI touch the oversold line or the overbought line at the same time, and there's an extra large candle that is longer than the previous candles, and it crosses the lower band of the Bollinger Band or the upper band of the Bollinger Band, here is a chance to make your trade. And also check whether the market is moving in a straight line. Check the Bollinger Bands whether they are moving in a straight line, though this is not all the time. Sometimes it works without having to be moving this way. If all 3 RSI touch at the same time, to overbought or oversold, then there will be a perfect signal. So your trade signal candle is usually extra large and without tail or a head. Sometimes it has a small head or a small tail, but depending on market volatility, sometimes you might trade at that point and lose. So the next candle, you trade at the next candle with the amount you traded with times 1.5. That is called the martingale. I'll show you in another video. So if you will be using other strategies, kindly just check market for that particular strategy. Don't mix strategies. So in this case we are using the reversal kind of strategy. So for reversal kind of strategy, we need the RSI to be moving from up to down like a W shape. One thing is most important for trade: we must choose a good chart for our strategy that supports our strategy. We must choose the best hours for trading, or the best session hours for trading. So according to this strategy, if the RSI is moving within the oversold and overbought line, then you have a good chance of trading. Make sure it touches the top, then comes back to the bottom, touches the top. That's a very good chance for trading. So that's a main consideration. When the from 9 a.m. to 10 a.m. more in the morning, then from 1:30 to 2:30 p.m., then 4:30 to 5:30, then 8:30 to 9:30 p.m. GMT plus 3. All these times GMT plus 3 are good for trade. Try in these hours and you'll find the best results. The other thing is, when there is a full hour like 1 p.m. on the dot, please stop your trade 5 minutes before 1 p.m. or 5 minutes after the full hour, because during the full hour some places the stock exchange is open while some places stock exchange is closed. So during full hours, do not trade. There is high volatility. So here we also see a chart. You can see that market is moving straight. Bollinger Bands are straight and the RSI are within the oversold and overbought. The RSI are touching the same time at overbought, and market is at the upper band of the Bollinger Band, moving from up to down. At this point you have a lower signal for put after the green candle at 31 seconds. Again we see the RSI is touching the overbought. We have a green candle without tail, without head, closing at the upper band of the Bollinger Band. This is a perfect signal. This is not a perfect signal. This is a perfect signal. You can see this RSI is touching the green line. The candle is extra large, without tail, without head, and close at the upper side of the upper band. After that you can see the market reversed from upper to lower. This is a good lower or signal. So another question is how to judge whether the RSI is good. It depends on the candle signal. Upon purchasing the course, in the zipped file there is a WhatsApp link folder. In that folder, when you click the link, when you buy the course and click the link, you'll automatically be registered to a WhatsApp group where you can share any questions you have regarding this strategy, and any other question you might have regarding IQ option trading and trading platform, and I will be able to answer you. I'll also set up a call day for a month. Within the month, I'll set up a day whereby you can call and ask me any question you might have regarding IQ option trading platform. So when you purchase the course, go to the text document, copy the link, and you'll automatically be able to join the WhatsApp group whereby we can chat. There's also my contact, and we can personally chat so that I can assist you wherever I can.